Okay, welcome back. Gary Dugan is CEO at Global CIO Office, and Niket Shah is CIO at Motilal Oswal Mutual Fund. We're now actually going across to the Motilal Oswal India conference, which is being held here in Mumbai. And both Gary and Niket are sitting down with my colleague Niket Shah, who's going to take us through some interesting conversation here. Niket, over to you.
Thanks, Prashant. Again, we're trying to just have an attempt of getting an FI perspective and a domestic perspective as well from the sidelines of the Motilal conference. Gary has been a veteran in the capital markets, over 40 years of experience across many large institutions like JP Morgan and Merrill Lynch. And Niket, of course, is now the CIO at Motilal Oswal. Gary, I'll start with you first. A very interesting feedback that I got from you that when you're advising clients to look at India markets, you said like global investors now have to look at India ex of emerging market. Do you think that's going to be a reality very soon, that a lot of global investors will ignore emerging markets but they'll still put money into India?
Well, absolutely. I mean, I think we felt even about 18 months ago that you couldn't just look at the emerging market block as a continuity. China is so different from India. India is so different from Indonesia. But the one thing we were most confident about was the Indian market. So we were extracting India out of the complex and saying we'll make a big long-term commitment to India, and the emerging markets will just pick them off as we see a tactical opportunity.
Sure. Gary, you've been advising close to $2 billion of advisory money for large family offices and ultra HNIs globally. What's the initial feedback when they look to invest into India? Are they now getting warmed up that this is a structural story for next 5 to 10 years and has to be invested in India now?
Absolutely. I mean, I think if you look around the world these days, you really struggle to find consistent quality growth. We can go into a sector called tech, but of course then that goes to sky-high valuations and people start to run away. I think, India almost stands uniquely at the moment as a country that can deliver to what's promised. A consistency of a political environment for the last couple of decades, it feels, but it's actually the last 10 years. But it's that consistency of the future. And I think when you can see compound growth rates of profits of 15% for the next 5 years, that stands way above anything else delivered by the world in a serious market.
Is that a reason why global investors has to look at India now? Because it's just in a sweet spot. Macro-wise, we've done well. And earnings are getting compounded every 2 years or every 3 years. So is that something that global investors will have to take a note of and look to invest into India?
Yeah, I think in the past people have thought of India as a tactical market. Yeah. You're in it one day and then there's a bit of a crisis and you run away again. But I think the last 5 or 6 years has told you it's wrong to run away. So it's better to put a marker down and stay engaged in the market through its ups and downs rather than run away and find that you've got to go buying it back at a higher level.
Sure. Niket, mutual funds has been a driving force for the markets to be at record highs, and we continue to see a lot of inflows into the mutual funds as well. You are now actively managing this as a CIO of Motilal Oswal. But I've seen your style. You've been a very concentrated player. Look to invest, take large bets, and act very fast. What is your sense on the markets currently? Is this a time for one to just be very quick in and out? And how are you approaching the markets now?
So Nimish, I think if you look at earnings growth in India, in this quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again, slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to.
When you're saying to avoid mistakes would also mean that you're in the right sectors, right? And I guess you've been one of the contra guys to aggressively look at a few sectors like IT and Telecom. Broadly, if you can explain your thesis on why you're bullish on IT first, and I'll ask you a bit on Telecom as well.
Yeah, so I think IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid cap and the small cap space have done extremely well, but overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US election, some of those challenges are likely to go out, as the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion.
Sure. A word on telecom as well, because I understand you all were very aggressive in the Vodafone Idea FPO as well. But generally, from a telecom point of view, do you think the repair work has started? The tariffs are going to only go up, and it's a structural consumption story now.
Yeah, so I think, in initial part of the year, we did highlight that telecom looks like the sector of the year. And the key thesis was that India has actually seen no major ARPU increases if you take a 10-year back track record, right? So our view was that every year from year on, India needs to take a tariff hike, because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they had bought 10 years back. And for me to pay, and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector for the next 2 to 3 years.
Niket, I'll come to you. You spoke about avoiding mistakes, but Gary, if I want to ask you, what are the key risks, or what are the few, things that you'll be focusing very closely in terms of maybe potential accidents which can come either from the global market or from an India point of view?
Yeah, I think the thing that India would worry about is a significant increase in US interest rates. Now, today we're talking about when the Fed's going to be cutting, but you just feel in the background that maybe inflation hasn't been completely suppressed. And if we were to see further geopolitical problems, for example, in the Middle East, with higher oil prices, we could be talking about a Fed that just stops cutting interest rates. That can put pressure on emerging market currencies, and it makes everyone feel like risk off. So that's the one thing that we're watching for at the moment.
What about geopolitical risk? Because that's been one of the other reasons why a lot of investors are a bit worried as well. And we've seen a lot of geopolitical risk across the world, right? Whether it's in the Middle East or a lot of other countries as well. How much is the geopolitical risk, according to you, for emerging markets as well as for India?
I think it's still serious. I mean, we've still got a war in Europe that people have kind of forgotten about. You've still got the challenges in the Middle East. The good news is that maybe those negotiations have taken a turn for the positive over recent days, but you can never totally believe in it. But it is still something that could be a negative that all of a sudden has people taking money out of markets and a quick downdraft of 10% off equities.
Sure. Niket, the other sector where you've been very bullish on is the platform businesses. You all were the first to invest in Zomato at 50 rupees, if I remember, and now it's almost 5x for you. And even the Motilal Oswal private equity owns a large chunk of Swiggy. What's the story there, and how big could be this Blinkit story and the earnings potential for these platform businesses?
So I think, the reason why we like this business, obviously food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies, which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India because of the way our supply chains are there, the way our auto penetration is there. And we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 markets. So that has actually been a bit of a surprise for us. And we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion.
Sure. But in that case, Niket, what about, the EV market in India? Again, that's a growing market. You saw what happened to Ola after listing, doubled in just 7 days. what's your take on the entire EV space and overall on the autos as well?
So I think EV penetration has to move up in India, but I think both of them will coincide, whether it's ICE and EV both together. But within EV, I think we have very clear understanding that whether it's four-wheeler, two-wheeler, there is no major profit pool to be made, at least over the next 2 to 3 years. The profit pool is actually in the three-wheeler LCV side, because the vehicle tends to run for a longer duration of time in the same day, and hence it makes unit economic sense if you take a 5 to 7 year view for that vehicle. So, you know, the LCV market, the tractor market, and the three-wheeler market is where we continue to like within the EV space.
Okay. Gary, if I want to ask you, we spoke about some themes like food delivery, EV. You've seen so many global markets in the last many years. What stands out for you in terms of the big emerging theme as far as India is concerned?
Well, I think there's just so many, but the one I pick on it is the consumer sector and hospitality. I mean, I've been in and out of India on many occasions for the last 30 years and just seen this transformation. But it's basically the enabling of people who are getting incomes to spend it on a broader spectrum of services and things. The shopping experience, which goes from shops to malls, the hotel that goes from 2-star up to 5-star. All these things significantly increase the potential of the economy to grow much faster than it has done in the past, as has been evidenced over recent years.
Sure. Gary, I understand you were surprised with the kind of transformation we've seen in the digital payment in India as well, right? I guess missed out on digital payments on some occasions. Has that been a big transformation for you?
Absolutely, because it's something that wasn't even occurring in the West.
Sure.
I mean, I did a quick trip to Goa and I couldn't pay for my taxi unless I had the right app, and I couldn't go to the beach bar and buy a drink unless I could tap my phone. I had none of these applications, and I just could not believe that transformation from, remember the dark days of demonetization, through to absolutely no need for money, which is incredible.
Right. Niket, before I let you go, last thing, the one thing that I've learned from you, talking to you on many occasions, this market also needs to be an aggressive seller at one point in time, and you've demonstrated that in some of your holdings. Tell us, what's the right way to look to sell as well, just from an investor point of view?
So I think for us, we strongly believe that buying is extremely overrated in India and selling is highly underrated.
Yes.
Everyone only talks about buying in India, right? What do you want to buy next? We do focus a lot on selling. We do focus a lot on what not to buy. And for us, that's quite important for us because that reduces the mistakes, right? The second thing, how we do take a decision on how do we sell, right? I think for us, earnings upgrade and earnings downgrade cycle is extremely important. We want to get into a cycle where we believe, for example, we believe IT is just beginning of the earnings upgrade cycle. From now, for the next 12 to 18 months, you will see earnings upgrade on a quarter-on-quarter basis. And that's something which really entices us to go overweight on a sector. And vice versa, it happens on the underweight side. The second thing is, if you know that earnings are likely to get downgraded, automatically you find that valuations have been quite expensive. No sector in India does very well for 5-10 year period, right? And no sectors are extremely good for the 5 to 10 year period. So you have to manage these cycles. You can't keep portfolio static. If you keep portfolio static, then I think you will tend to underperform in the near future.
Niket, thank you very much for joining us, and same with Gary. Thank you very much for joining us. Back to you, studio anchors.
All right, thanks very much. Very interesting sort of ideas there. IT, perhaps, something to look at. And Nimesh, do convey to Gary that now it's the reverse, right? Because when we travel to Europe, when we travel overseas, we feel it's so primitive. Why do we have to take out cash and pay through a card? We want to tap our mobiles and take our mobiles and pay everywhere, right? That's the India payments revolution. So please pass on our message. And we'll come back to you for the chatter in just a bit, Nimesh. Have to take a break right now. And then, of course, as always, all the buzz from